Welcome back to Crown's Crypto Cave, and hey, happy Saturday. Hope you made it to Saturday morning, or maybe you're coming back from the bars late at night over there in good old the West Coast America. Anyways, hope everyone's doing well out there in cryptocurrency land, and as always, wishing you the best of the best Saturdays possible. So let's get into the live stream right over here because we do have a new monthly today. Not too much action in the overnight session. Actually, still just filling out the same area that we were in yesterday. So first things first, let's kind of cover up the higher time frames and get that out of the way. Of course, 6,000, the big bad area that, as long as you're below there, I am quite bearish, and I don't believe that we will be revisiting 6,000 anytime soon. And when I say anytime soon, probably, months. Anyways, a couple areas to be aware of on the way. Of course, we got this guy right over here, 5,500. This kind of like little stutter step right around 55 and 56. Then we got this guy right here, 4,550, which Bitcoin did make a run for this past week, but rejected right at the 4,250-ish area, which is, if we go over here to our Bitstamp chart, our longer term chart, that is our weekly 200 exponential, actually coming in a little bit lower, right around 4,200-ish. So today is an important day because it's a setup for tomorrow, and there's just there ain't too many days left for the weekly, right? And I want to see where the weekly does indeed close. Do we close above or below that 200 exponential? Now, here's the thing: if Bitcoin does close above the 200 exponential, again, 4,200, which is looking a little bit less likely right now. That would imply that, yes, we will start filling out the mid 4,000s. If Bitcoin ends below this 4,200 area right over here, does that imply that we just immediately shoot onwards and downwards? I would say no, but it would certainly be a lot less encouraging. Yes, it would be more bearish overall, but we do have to remember that when you get the next weekly, and I'm talking about like now in the future. And again, this is very bad technical analysis to even be talking about this kind of shit before it happens. But just kind of planning ahead, you might get a wick above this 200 exponential right over here, and then the actual move itself, a little bit of a fake out because too many people are going to be thinking the same thing. Everyone's looking at the same goddamn thing right here, so got to be aware of that and understand that usually when too many eyes are on the same trade, well, the opposite does indeed happen. Let me just get rid of this guy right here because that's annoying, and just talk a little bit more about this area and the significance of it. So we're currently kind of at the lower of this blue box territory, right at the 786 Fibonacci retracement, right at this nice horizontal area right over here, and also at the 200 exponential. And if we put on the volume profile, yes, we do have a nice kind of thick volume node right over here after just being flung off a fucking cliff from 6,000, straight, pretty much for all intents and purposes, a straight shot down, which, by the way, you will notice that if we do lose this 3,600 support, which we'll talk about a little bit later, there ain't nothing doing until this next lower blue box, which I do believe that Bitcoin will get to, but I'm not necessarily convinced it happens today. I think it's going to take a lot longer than many people realize. Anyways, okay, so and we're also kind of basing on this diagonal trend line right over here, which, by the way, great kind of follow through with the 2014 segment as well. 2014 market cycle, we had this guy that we kind of broke out of right over here, then base 1, base 2, we have our first base coming right over here. Technically speaking, you actually did bottom out on your 886 Fibonacci retracement in the 2014 market cycle, and also the 200 simple and 200 exponential, but you really didn't have enough price action history to be populating these sorts of things, which need quite literally 200 weeks just to get one tick. So over here, you can see that if we did put an 886 Fibonacci in, it would be actually putting us down towards this mid 2000s area right over here. So again, I do like how it has good follow through with those areas, just kind of plodding ahead. But as long as 3,600 is holding, don't really want to be positioning myself for too much for like a directional trade to the downside. But hey, that's what I would be looking at, and that is kind of the significance of the next couple of days. Do we close? If we can close above the 200 exponential, which is, again, looking a little bit less likely, then yeah, Bitcoin will start to fill out this area, in the mid 4,000s, and perhaps even test this dotted trend line, which, by the way, is the 10-year logarithmic trend line of Bitstamp. Bitstamp hasn't really been around for 10 years, but it's the longest running exchange since the inception of Bitcoin, or since the inception of Bitstamp, I should say. And actually, our rejection currently is coming in around. You could even consider that a test of that trend line, of that dotted trend line, which was broken on last week's dildo. So again, if we were to end, below here, not only would it look like a rejection of the 200 weekly, but it also look like 200 weekly exponential, but it also looked like a rejection of this sort of the bull channel essentially is what you can refer to it colloquially speaking. And I'm struggling with my words this morning, but the show must go on. Anyways, overall Bitcoin putting in its first kind of prolonged kind of sideways action right over here, but really to kind of nail it down, we do have to go over here to our Bit Mexico chart, go down to lower time frames, go onto the hourly. This is the chart that we were looking at yesterday. If you do want to look at this as a head and shoulders over here, which it's not really, and you actually, technically you do have a measure move taking you all the way down to 38.30. I'm sure a lot of people are talking about that, but technically it's not. I mean, the volume characteristics are wrong. The shape is the shape could work. But it's not the most picture perfect one by any means. Anyways, I left you off yesterday night when we were essentially kind of going sideways in this range right over here. I think we were looking at it on a 10-minute, and it's just a beautiful example of how when you don't have volume confirmation on a pattern like this, it's less likely to actually play out. So we saw, it first kind of initially break out up over here, I believe it was, and then look at that, it fails after that. Funnily enough, these areas actually do kind of still hold true, though. So if we were to really start to, play this guy out, it does look like we're just completely making something new. So again, something like this is what we're doing right now. This is a very low time frame, so it's like, how much weight do you really put on this? Not much, or at least I don't. I don't trade this kind of bullshit right here. I will if I see like a volume spike and then we actually poke our head out of the resistance or below this support, then yeah, it might be worth playing. But really, I'm looking just for kind of an opposite trade on the measure move of this guy, which actually, yes, we can have one, but this is a wedge formation, again, my least favorite one. So I'm not in a hurry to play like anything here. It's this is just bullshit to me. This one would be pointing you up to about 4,100. So you could just kind of also insinuate that as a test of this 4,120-ish area, especially if we're looking at it on a 10-minute. You could actually just reduce this down all the way here, and it basically, kind of equate out. So if we were to play this onwards and upwards, yeah, 4,100 is where I'm looking. That would also be kind of the neckline of this formation right here, or just the form of support trend line of it, if you want to be a little bit more like just fucking black and white and stating it that way, which I actually think is much more helpful. Anyways, when it comes down to it, these sort of formations, they can break out any goddamn which way. I've seen them break out any goddamn which way. So if we did break it out to the downside, do we have a measure move on this guy as well? Yes, we do. It'd be pointing us down towards here, towards the next blue box territory, which technically speaking was the measure move if you were looking at this as a head and shoulders, although I do have my gripes with that for sure. But hey, there you go. So I do like good confluence between these two things as well. Would I be a buyer in this blue box? No, I'm not really looking to be a buyer at all in this market. It's just not worth it in my opinion. So overall, that's one of those things that I think, I just can't stress enough that first things first, in a bear market, I don't really look to be a buyer. And also right now, your only job right now is to just really wait for the weekly. Weekend action is going to be pretty fucking floaty, most likely. We did get a new monthly, so let's go check out the monthly. And we actually do have a few things to be speaking on the monthly, because again, the lower time frames, there's not really too much to be speaking on right now. Let's just actually wrap that up really quick. The lower time frames, there's not too much else to be speaking on. It's just, as long as you're above 3,600 right over here, you don't really want to be having the directional trade to the downside. If we do break it back above the prior range high at around 4,350, it's not that I get like super bullish or anything like that, but like I said, that'd probably lead to the scenario where we start filling out the mid 4,000, somewhere right around 4,550 to 4,600, and you got 4,800 above that. And if that area gets taken out, then hey, yeah, maybe do actually test 5,200. But again, that's well and far away. I'm not really looking for, whether upside happens or not. I'm not really looking for it. I'm looking for places to get short. So when I see like a good short opportunity, that's really what I'm looking for. Right now, I don't really see the best one either way. The kind of best case scenarios I see, maybe you come down here to 3,800, and then actually, just by the nature of it, you're just like, fuck it, let's just test the support anyways, down around here, right around 3,600. But again, I is there enough edge on that trade? Well, it's a $300 trade, so it's not bad. But right now I'm still short from 6,300, so I don't really have any, interest in in just starting another position, just to start another position. So let's get this guy on over here. Let's go to the 2-day actually, and look at the higher time frames, and then we'll get to the monthly really soon. Okay, so 2-day right over here. Very bad things are happening right now. Not only is your 21 exponential well below the 6,000 area, which remember, keep in mind that's telling you that the moving average, like literally the average of of this 2-day dildos for every 21 periods is now actually well below that critical 6,000 area, meaning meaning literally that is where we're going to find some really tough resistance. So each and every moving average that gets pulled below the 6,000 area is going to just provide more and more pressure. You can see now that our 2-day 55 exponential moving average has actually dipped below as well. It's actually currently at 59.63, and it will continue to get lower as all these exponentials are aggressively sloped to the downside. Let's go over here to the 3-day. 3-day, same sort of thing with the 21. We don't really have anything else kind of coming back below. Yes, we do have the 30 simple moving average, but I don't really put too much weight on that one. Only care about it for the slope. Sorry, we should have covered up the daily as well. Yes, the 100 exponential is now officially below that area as well. Again, that's 100 periods for a daily time frame. Weekly right over here. Weekly doesn't really have anything below just yet. And well, perhaps if we put on the 10 simple, it's going to be below, I'd imagine. Yeah. It's just kind of dipping below right now, crossing the 100 exponential. So again, things are slowly turning around, and I would be, if people are saying that the bear market's going to end like fucking next week, I'd be extremely careful with that sort of shit. Let's go over here to the monthly, because we did just get a new tick on the monthly, and this is very important right here. Okay, so we closed the monthly out on the lows, essentially. This is a very small wick, comparatively speaking, right off the green 55 exponential moving average, which did not break on the first pass, so that is good. That offers up at least some like longer term hope, I guess you could say. And yes, I do believe in Bitcoin long term, but you really don't want to see that one break on the first pass. So that's kind of the good news. The bad news is that you got your first dildo closing below this 21 exponential right here. Very likely that we close this next one, and whatever the high of this next monthly dildo is going to be is probably going to be a great short. Again, just giving my opinion, that's not technical analysis, just going off of past experience. I do want to speak on this as well. You will see in 2014, and just basically in generally in assets, again, coming from my background as a market maker in equity options, trading, like equities that literally have 10, 20, 30 years of trading history, I use the 21 exponential on the monthly to judge if we're generally bullish or generally bearish. Well, we have actually closed our first thick, girthy dildo below that 21 exponential. So I would say that this is actually, from a more traditional standpoint, the more bearish actual interpretation, like time to say, okay, this is actually when. Although, of course, if you go down from 20,000 to 6,000 right over here, it's like you can't really. It doesn't matter if you tell me that's bearish or bullish. I'm like, that's a fucking hefty move right there. Anyways, you will notice in 2014, when you actually did crack through your 21 exponential, that was when things actually did get accelerate pretty damn aggressively, actually. And when you actually got back above it, that was when things when the light started to turn back on and actually started a 3-year bull run. Now you'll notice that the 21 exponential is where it's actually well below 6,000 now. It was 6,000 as of yesterday when we were still in the month of November. It was 59.50. So right around that resistance. My God, my throat is just fucked right now. That came out wrong. Definitely take a look at the mix section on the Discord, but not if you're at work. Definitely if you're at work. Anyways, now the 21 exponential on the monthly is actually coming well below that 6,000 area. It's actually 57.50, which is not fucking good. You do have the 30 simple moving average, which is going to start to flatline. Really don't want to see that one get a negative slope. I think that's almost never happened in Bitcoin's history. Yeah, I don't think it's happened in Bitcoin's history. And yes, it's still kind of angled up now, so it's going to take a while. It really does take a while for that slope to kind of turn around. But even in 2014, you didn't really do that. So I'm looking at that guy right there and thinking to myself, okay, it's like a ticking time bomb, but you really don't want that slope to go negative. That is one that I care about most when it comes down to slope. Now, over here on the actual chart, I do want to bring up this guy as well. Again, not my favorite way of doing things, but it is interesting to me. I'm going to put on the Trollinger Bands, the Trollolols. Now, we have, this is very nasty right here. Bitcoin has both opened and closed its first monthly dildo below the median band right here. Where is the median band? The median band is currently all the way at 66.50. And yes, this is confirmed kill of it. We have both opened and closed a full dildo below this guy. So to me, that is a confirmed kill. And what that typically insinuates, and again, I'm not saying this always happens 100% of the time, and there will be time that elapses. So take what I say next with a grain of salt. But what that typically implies is that you will be testing the lower of your Trollinger bands at some point. Now, you will notice that this thing is aggressively coming up. In fact, just yesterday, it was all the way down here at literally $300. Now it is up here at about $800. So with each and every month that you can actually go sideways, it will come up to meet price action more and more. So again, if you want to go back to why I keep on kind of repeating myself saying, it's good if you are kind of like a longer term bull, it's better that Bitcoin doesn't just shoot down extremely violently, extremely fast. It's better that it kind of like goes a little bit slowly down. As you know, as all these major areas will start to meet up with it. Again, this is not my favorite way of doing things at all whatsoever, but just kind of like a secondary confirmation tool. And again, just from like the higher perspectives, if you want to talk about like potential downside targets, of course we have the next area around, what was it, like 26 to 29. If that area gets taken out, which again, this is just planning out in advance. I'm not saying that this is going to happen, but if that area were to get taken out, well, the prior high of your past market cycle typically does become the new lows of your new market cycle, which would be all the way over here at about 1100, 1200-ish area. So again, from a more technical standpoint, that actually would insinuate that Bitcoin is, again, take what I say, like, let me explain what I'm about to say first before I get to it. Bitcoin could get all the way down to 1100 and it would still be, from a technical standpoint, okay. Now, that's not going to sound okay for hodlers, of course, but from a technical standpoint, you could still bounce off of that area and pick itself up. It's really not until you actually smash through that area where, like, from a technical standpoint, it's like, oh, something very wrong has gone on here, and it's like, oh yeah, no shit, we've gone from 20,000 to 1,000. But again, from a technical standpoint, if you do go down below there, below your past market cycle high, which again would be around 1,100, and close below there, that would be indicative of like a dying asset, like a literally dying asset. So that would probably come about if there's like some sort of fundamental fuck up with Bitcoin. But for now, plenty of room before there, plenty of room before there. But again, opening and closing our first dildo below this medium band on the monthly is not fucking good. No matter what way you cut it. Again, we do have plenty of room to the downside, and I don't believe that this is going to be ending anytime soon. Exactly what you don't want to see if you want to be more immediately bullish. I do want to take check out the weekly as well. Trollinger bands, again, not my favorite way of doing things, but not only is the 4,200 area our 200 exponential moving average, which I put a shit ton of weight on, it's also essentially our lower band, which is actually higher, 4,430. So Bitcoin is actually trending outside of the lower band, which yes, it certainly can do, just like it did to the upside right over here. Typically that does happen like near the end of the run, but it can, this can go on for a couple months. And as you can see over here, it's pushing, like we are rejecting. And with closing the weekly, essentially closing the weekly tomorrow at 7 p.m. Eastern Standard Time, very unlikely that we get back above 44.30-ish area on Stamp. If you can, then that would actually insinuate a much more prolonged bounce in this like 4,000s range. But for now, we are actually rejecting that area and trending down on the weekly. Again, when you have a basically an 11-month consolidation above 6,000 like this guy right over here, and then you break it to the downside, which we did at around 6,000 on that first crack. You can't just expect that it's only going to be 2 weeks long for the downside. I mean, just like, when you spend all this time going sideways right over here, it's not like you're just going to go up for like a couple months right over here. No, it's like 3 years. I'm not saying that we're going to be going down for 3 years, but it's, this can take a long time. It can certainly take a very long time. So again, just putting these guys back on over here. This is going to be the critical thing to be aware of coming into the next coming into the next weekly dildo close. So again, be very aware of these things. I don't really think that there's too much to be doing now from like a trading perspective. Maybe you go over here to like the 4 hour and see if there's anything going on. I mean, this looks like it wants to come down. It looks really weak right there, but again, it's weekend bullshit. Typically, whatever happens on the weekend gets faded coming into like the actual trading week. CME futures, by the way, closing yesterday at 39, a lick below 39 at 38.95 exactly. So again, coming into tomorrow at I think around 5 Chicago time, they open back up, and if we are below this price action, that's going to be a major sell. If we are above this price action, it's probably going to be like a scalp buy for like a small bounce or something like that. Overall, I don't like the way that this one closed. Again, very nasty indeed. These things are really starting to mount up, and I'm almost curious, like, are there any bulls left at this point? I think we are getting to the stage of the market where, like, we're getting, like, the opposite but equal stage of the market, like, over here. I feel like, in the emotional phase. Let me go back on over here. We're getting like somewhere like over here. I feel like from our past market cycle, like where everyone was super bullish over here, and it was just rewarding like the silly investors who just like fucking buy every little dip. Because I mean that's actually like the right thing to be doing. But you know, it's like you don't have to be a fucking professional trader to make money in a market like this. You just have to fucking be there at the right place at the right time. Well, we're kind of getting to that same area right over here. It's just like every little bounce is shorted. And kind of like the more simple minded traders are getting rewarded for being more aggressive. So, you know, that's probably going to go on for a little bit longer. You know, it typically goes on longer than it always goes on longer than you think it can go on for. And I think that we're just kind of like dipping into that right now. So, you know, overall, I don't think that Bitcoin, Bitcoin has been correlated to SPYs, to our traditional markets, but yesterday, not so much. SPY actually closed the week up and kind of averted this potential death cross right here. I mean, of course, it hasn't done that, you know, for the rest of its life, but closing back above the 200 exponential right here and getting some nice runway between the 55 and the 200. Well, it looks to me like you actually do want to put in another run a little bit higher. I think that we did close the week out. Yep, right here at the 21 exponential. We spoke about how that was likely to be the range for the week. I think putting it on right there. There you go. Even have the arrow to prove it. Beautiful. Anyways, over the next week, probably going to be, I think next week's probably going to be an up week. Again, December, typically an up month. You get the Santa rally, you get all that good stuff. Does Bitcoin join along with it? Well, it did not get the same love that traditional markets got yesterday. So I was looking for that to actually play out. Again, no positions myself, but you know, they have had that correlation as of recent times. But SPYs over here actually like getting above this horizontal right here, whereas Bitcoin was actually rejected from it at 43.50. So again, is Bitcoin relatively weak? Well, that would imply so. Let's go check out GBTC. How did he close today? Not fucking good. Yes, he didn't break this support over here at $4.82.5, but it also doesn't look too damn good. Again, this is a rejection of $5.53. This is not like a major resistance or anything like that. This is just not like a good setup right now. Again, retracing your whole fucking pump dildo right here. Yeah, you did kind of fill the gap, so maybe we do kind of work our way higher coming into Monday. But again, from a higher time frame perspective, you can't really get excited, or at least I can't get excited about GBTC until you at least get above like $6.80, but really like, you know, $8.05. So Tony Vay is not going to be happy about that one. Jesus Christ, man, just fucking destruction right now. But again, you know, maybe it does kind of join the rest of the market. As long as you don't break $4.83.5, you can always make the excuse for it that, oh, it's just a gap fill and we're probably going to work our way higher. Well, yeah, until we don't. So if you do take out $4.83.5, I think not only will you be revisiting your prior lows, you'll probably be breaking them as well. Okay, so let's go back on over and check out what else do I want to check out? Oh yeah, the MBT signal right over here. So again, you know, I hope I'm pretty damn clear in stating this, that yes, I am bearish. Yes, I do think that Bitcoin goes lower, but I think it's very important right now to have like a good idea of timing on these sorts of things. I think it's going to take a lot longer than most people think, but again, there's no real way for me to like know anything like that. Just kind of, you know, marks typically don't move in like a straight line, so I'm waiting for like one of those major bounces at some point, and that should that will probably be like the final shakeout before the ultimate low. Anyways, the final shakeup before many shakeouts, perhaps. Anyways, the MVT signal right over here, something that's kind of divorced from our traditional technical indicators. So I do like it from an external standpoint, kind of agreeing, saying that, hey, anytime that you do get above where my cursor currently is, it essentially calls tops. If you're not familiar with this indicator, now. every time that it has called tops, and it literally has called every parabolic top and major bull trap in Bitcoin's history, it does typically come down around where my cursor currently is now to kind of base again, like right here for 2013, then later again in the bull trap of 2015, and later over here in 2017 on that first big down to February lows. You have your times before that right over here. So overall, it does have plenty of room to go down as we're currently at the 100 mark, and these things typically get actually below the 50 mark. So again, halfway to go. Do we have anything else to be looking at from a higher time frame perspective? Yeah, sure, certainly. I will be covering more higher time frame analysis tomorrow, but I'll just kind of leave it. I guess we'll start to wrap up this video pretty soon because it's already probably gone on long enough. But going on over here, going back to our Bitstamp chart, yes, we can look at the fibs, we can look at the moving averages, we can look at all that good stuff. We looked at the diagonals over here, kind of the same basing formations. But let's also just look at a date and time projection, a date and price range projection, and let's just kind of measure this guy out. So on this first drawdown from the ultimate high to this first kind of major bull trap in 2014 was about almost a 77% drawdown. Well, let's see if that matches up with what we're doing right now. Well, look at that. Sorry, let me actually get this right. There we go. I think I got that a little bit. Yeah. There we go. Okay, so 78% right here, which is where we're currently at, right? So, and sorry, this one's probably even a little bit long. Did we go down here? Yeah, there we go. Okay, so 76.5%, 78.5%, close enough is close enough to me. So again, not my first way of doing things, but it is interesting that if we were to kind of project this forwards to 80, all the way down to the ultimate low, that was an 85, 86% drawdown all the way over here. Well, what happens if we maybe project that into our next blue box territory? Well, that's right around 2,700. Again, not my favorite way of doing things, but it is interesting that it has good confluence with all the other things that we're looking at. Again, the exponential moving averages, the simple moving averages, the horizontals, the volume profiles also kind of coming in around that range as well. The horizontals, the Fibonacci's, the 886 and the 786, which is where we actually accumulated in 2014. Also the MVT signal, which we just looked at, and just that percentage drawdown that we just looked at as well, and also the Trollinger band. So a lot of things really kind of coming in with each other. I do want to check one more thing before we go, the monthly accumulation distribution indicator, because we did just get a new tick on that. I'm curious if it's still headed south, as I only care about slope in this guy, and it actually has started to lose its slope. You will notice over here, you did start to lose your slope over here. So when going back to that kind of, to that idea that we just explored of this, of perhaps playing out a bull trap at some point in time, well, does it make sense for it to happen soon? I don't. Again, time analysis is not my thing, but typically speaking, you bounce off the 55 on your first pass, and then we figure it out from there. So again, whatever happens in this next month's action, I'll probably just be looking for a place to get short on for another directional trade, whether it's breaking 3,600 first, or whether it's coming back up and maybe tagging, like 45 or 46, 48. Doesn't really matter to me. That's kind of what I'm looking at right now. Again, going back to the lower time frames before we close this out, as is there still much to do over here? There's not really much to do over here. When things usually hesitate like this, it makes me very apprehensive. Yeah, typically you look at this and you'd be like, yeah, that's bearish as fuck. It's just droopy. But, weekend action has a way of really fucking with you. I don't really typically like trading it, so I'm not going to trade this myself, so I'm not going to. Should I even talk about this? Is that even like is that even appropriate? Well, I guess you could say, hey, if you get like a nice volume spike and break out above this area right here, about 39.75, looks to me like the measure move is pointing you around 4,100, which would also be a retest of this kind of breakdown area right over here. By the same token, if you do break out to the downside, which technically speaking these are more likely to, but again, weekend bullshit seems to, it's just really easy to float price around. If you do break out to the downside with the close below about 3,900 on decent volume, and when I say decent volume, you need to see something better than what we've done over here. Then yeah, 3,800 is the next area that'd be looking towards our secondary blue box down around here. Also the target, technically speaking, of this head and shoulders, if you do want to call it a head and shoulders, although I still do have my problems with that. Technically speaking, it's not one. It's technically not one, but if it acts like one, it's like, all right, then what's the fucking point of calling it one if it's not, it doesn't matter at that point, right? But the volume would be Would it be okay? Yeah, I guess it could work on this guy. I guess it could work. I am curious though. Again, I keep on saying this before we go, but I am curious what our oscillators say right now. Let's get rid of this guy though. The 2 hour over here just got a pretty bad cross in your exponential moving averages, so that would suggest some more down. 3 hour over here. 3 hour Stokes are are about to get a fake out to the downside if we move any lower. No divergence on these lows just yet or anything like that. And also the 3 hour rejecting this nice cross over here, the yellow 21 and the green 55. So to me, when you get really, really close to these kissing and actually giving you a positive bullish cross, and then you get some major red dildos on relatively heavier volume than what we've been doing, well, that's typically telling you, hey, we're not fucking doing that right now. We're not doing it. And we really don't want to do it right now. So, if I had to give my opinion on it, yeah, this one wants to come down lower. Yeah, technical analysis typically would say that something like this does come down lower. But man, I just have trouble, taking trades on a weekend. And like I said, I'm still short from 6,300 on my account. So not really, I would rather just sit and watch and kind of wait that one out. 10 hour over here looking kind of droopy as well. 10 hour Stokes also crossing down. So perhaps you're aware of those guys. 12 hour, do we have anything to look at on the 12 hour? 12 hour gave you the bullish divergence coming off the lows, the nice 3 drives, tested the edge of the bearish zone, rejection. And that's, again, if you're in the technical analysis program, keep in mind the interpreting indicators section, because that is where you'll get the logic for that guy right there. And again, it's, this is just nasty. I mean, you got rejected from your 21 exponential. You close your first dildo above it. I actually respected that, and actually did take a long off that just because, I took it a little bit lower at around 4,200, just because that's what trading is. You take your risk rewards when it arises. But this guy closing below as a rejection was a clear fucking sign that we were not cool with living around the 4,300 level. Again, also interpret that as a rejection of the weekly lower Trollinger band and our weekly 200 exponential as well. So, again, it's waiting. I still believe waiting is the best policy right now. It's going to be hard because this really does look like it wants to come down, and again, if I didn't have a position, I would be taking a short off this and just playing this formation right here. Manage risk above 39.69. Hey, and there we go. We're actually kind of ticking down a little bit right now. 39.11.5. It looks like. Putting on a 5-minute, but again, no volume over here, so it doesn't really, it's like, all right, we're just going to keep on doing, it just keeps on walking its way down. But these are like the kind of BART patterns that you got before, and I fucking hate that I just use that word, BART. But a lot of the times you get like these droopy bearish patterns, and then they just be bought up. And I think, and my kind of theory on that is that, it's only traders really left in this market now. So everyone's like got probably the base knowledge. So you got to paint something that implies a certain area and then run it the other way, because, well, fuck them. So again, that's going to do it for this morning, guys. Hope this one finds you well. Hope that you're having a great time in good old cryptocurrency land. If not, I'll be back on a little bit later. I'll be on the Discord as well. So look forward to see you guys there, and take care.